Good afternoon, everybody from Florida Credit Union. It's a bright, shiny day. I just wanted to welcome you all to a webinar about burning questions answered and how to buy your first home. So just a real quick housekeeping. If you look in your upper right-hand corner, you're going to see a little hand waving at you. That is for your questions. Click on it and then click on the word questions and you can type in your question. Now, we will have a Q&A at the end of this where I answer all of those questions, okay? So a little bit about myself. I am not from Florida, not native born. I was actually born in a little town just south of Dallas-Fort Worth. On the screen, you're going to see some information about me, and there is a bio right there at that link on the bottom. So feel free to look me up and see a little bit about me. So today we're going to go over the burning questions. I want to be a home buyer, right? I want to be a home owner. How do I get started? It's one of the most common questions we get. Where do you even begin, right? How much do I get approved for? What's your interest rates? How much money do I need? And does Florida Credit Union have any first-time home buyer programs? These are great questions, and I'm pretty sure most of you have the same ones. So we're going to answer those questions, but first let's go over the housing market right now, because those questions will be answered based on what kind of market we have. It's referred to as a seller's market. There are some signs that it's cooling down a little bit. As interest rates have increased over last year and the prices of homes have started to come down a little bit, the number of homes listed, it's increasing. So beforehand, you had a hard time finding a bunch of houses. Now there's a little bit more to choose from, which is great. And the best part is, at Florida Credit Union, we do have options to help home ownership be affordable, even in a seller's market. So there are a bunch of different types of mortgages that you can choose from. Things like fixed rate, an adjustable rate, which is also called an ARM. There are also government-backed loans like FHA, USDA, VA, Fannie Mae, which is also considered conventional. There's also construction loans on block houses as well as manufactured homes. Florida Credit Union does a bunch of different types of homes, things like townhouses, condominiums, new mobile home purchases, land. I had a buyer one time, they were approved, right? They did all of their work, they got their approval letter, they went to their realtor, the realtor found the house of their dreams. They went back to their lender and they said, hey, we've got it, we've got a purchase contract, we're ready to go. And the lender told them they do not loan on those types of homes. So they called, I worked with them, and I have to tell you, the garden they put outside of their home is beautiful, beautiful. Florida Credit Union does do loans on a bunch of different types of houses. Call us and ask us if we do the one that you are looking at and give it a try, because not all lenders do all types of homes. So another question is, what can you afford, right? How much of a house are you going to buy? You're looking at Zillow and realtor.com, and there's all these different prices of homes. It's hard to know what you can afford. And house buying is not like any other type of thing that you've ever purchased in the past. The loan process is different. So we can help you with that. On the website, there is actually a tool that can help you figure out what your budget is. You can also call us. We're going to walk you through what your budget is. We're going to help you determine how much you can afford. Average is usually 2.5 to 3 times your gross income, but that is not a hard, fast rule. So we'll walk you through it. We'll actually help you figure it out. So what is a mortgage payment, right? There's a bunch of things calculated into it. It's not the same as, your car payment. Your mortgage payment has your principal and interest, right? That is how much you're paying for the actual house itself. Then you have taxes and you have insurance. That's referred to as your escrow. And it is what is included in your mortgage payment. So What are your current interest rates? It's probably one of the most popular questions that I get personally. And I want to be really clear on this. Your credit score does not determine your approval. Your credit score directly affects your interest rate. You can absolutely have a 400 credit score and still potentially get an approval. It is not your credit score that approves you, but it is one of the largest driving factors of what your interest rate is. Other factors, like how much money you're putting down, the loan program you choose, the property type. Is this a secondary home? Is this an investment property? Or is this going to be your primary residence? These are items that affect your interest rate, and all of them will determine together what your interest rate is. So, how much money do I need for this? When you went to buy your last car, you put money down, right? And then they have this thing called TT&L that they put into the loan, right? Your tax, title, and license. Well, let's compare it to that. So at the beginning of your loan, once you have a purchase contract, you put down what is called earnest money. It's also called a deposit. It's also called escrow money. There's a bunch of nicknames, but it's basically your way of telling the buyer you are serious about this transaction. It is put in an escrow account and it's held there. It does come out of the down payment amount that you are putting down on this house. Then you have home inspections. Not all inspections are going to be required on every house that you buy. Different homes, different loan programs will require different inspections, but that is potentially a fee out of pocket. Then you have your closing costs. This is like your tax, title, and license, and it is paid at the time that you close. Then you have what we call escrow. This is your homeowner's insurance and your property taxes. All of these together add up to your total closing costs and the amount of money that you need to save. So, where do you get that money from? Biggest way is probably savings. You want to save up some money. Saving money is not just in a savings account. Sometimes it's in investments. Sometimes it's a retirement plan. You can use gift funds from a relative. You can do a gift of equity, which is where they give you some of the equity in the house. Down payment assistance programs are also out there. You also have lender credits, even seller's concessions that help you come up with the money. So the first step in this process is to do an application. It's free. It doesn't cost you anything to do the application. And we're going to call you. We're going to walk you through it. We're going to figure out if you're not able to get there right now, we're going to see what we can do to get you there. This process is scary, and we're going to partner with you to walk you through it, to show you what we need to do to get you into a home. Had a couple call me because they never thought in their wildest dreams they would ever own a home, and that's what they wanted. They did not think they were creditworthy. They did not think they would ever get approved. 3 months it took after their initial application. We changed some things. They did some things a little different. 3 months later, we have an approval. 3 months after that, they were having a barbecue in their home, their first home purchase. But it all started with that application. So you do the application, but what about the approval? How do we get the approval, right? Well, some things on your credit report help contribute to that approval, some things, and these are some of the things on the credit report. Nobody's perfect, and Florida Credit Union absolutely understands that bad things happen to good people. We even approve you with bankruptcies with no waiting period, depending on the application, right? But you really want to know, credit cards not being maxed out, not really having a lot of credit inquiries. Those are all good things. You don't need to pull your credit yourself. We can do that for you in the application process. And this allows us to review everything with you. And if you're not able to do the approval right now, we can work with you to get there for the approval. Other things than just credit can approve you. It's not all about credit. It's also about you, where you're at, how long you've been at your job, your home, what's your income? Have you saved anything? Can you prove that you've made payments to your rent for the last 12 months? There are other factors than just your credit. So why do you need a pre-approval? Why do you need to go through this process, right? The beginning of this, I said that this is a seller's market. Most realtors are not going to make an offer on a home without this pre-approval letter. Now, the pre-approval letters are free. We don't charge you for it. We don't charge you for the application. We're going to help get you there to get you this letter so that when your realtor makes an offer on a house, they attach this with that offer and it makes it a stronger offer, more likely to get an approval. So what is a first-time home buyer? I have a lot of people think that they don't qualify for a first-time home buyer program because they owned a home 5 years ago. You can have a home in the past 3 or over 3 years and you're still considered a first-time home buyer. You just need to have 3 years from the last home you owned. If you're a single parent who only owned a home with a former spouse, you're still a first-time home buyer. If you have a house that is not permanently attached to a foundation, you're a first-time home buyer. Or if that house is not in compliance with building codes, you're a first-time home buyer. So what do first-time home buyer programs really mean? Every program has different qualifications. Sometimes it's anywhere from 0 to 3.5% down. That's of the purchase price. Typically, it's 5% down for somebody that has had a home previously. So first-time home buyers programs is definitely beneficial for your down payment. It also can qualify you for down payment assistance. Sometimes lenders still want to see that down payment, but they'll help you with that down payment. It can also help you with closing costs. So that's called a lender's credit sometimes. Sometimes it's a grant that comes in that helps with all of these. Those are what first-time home buying programs do for you. So now you know what the first steps are, and that's the first step is an application. You get the application in, we get you there to where we get you a pre-approval. Now you have a pre-approval, and what do? Well, you need a realtor to make an offer, right? So let's find a realtor, let's find some houses we like. Know what you want. Work with your realtor to figure out what's the home of your dreams. The realtor takes that letter, makes the offer, you get what's called a purchase contract. That is where the seller agrees to pay, and you agree to pay. Everybody's agreeing on what this home is worth, and then we move forward with processing your mortgage. We schedule a date to close, and you get a set of keys, and you get to move in. Your pre-approval letter is typically good for 30 days. We can push that out for another 30 for a total of 60. That's how long your pre-approval letter is good for. So we have 12 people here at Florida Credit Union ready to do this for you. We're in Gainesville, Ocala, Lake City, DeLand. You can see us all online at the link that's up there. We have been here since 1954. We're pretty stable in the community. So up on your screen, these are just some resources for you to use. There's calculators in there. There are articles. There are just little bits and pieces here and there to help answer questions that you have. You can refinance there. You can actually do a mortgage application there. You can also find out our contact information and call any one of us directly. You can also go to the link and see me personally and reach out directly to me or any one of our mortgage loan originators. So that concludes our webinar, and you are free to ask any questions that you have. Okay, so here's a question. It says, how long are rates locked for, right? So every loan program is a little different on how long they lock their rates for. It's anywhere from 30, 45, 60 days. It just depends on the loan program. So when we go to lock a rate, we're actually going to discuss it with you. Make sure you're aware that it's being locked, how long it's for, and what happens when that expires. And if the rates go down, that's the kicker, right? What happens if the rates go down? Well, we're actually in a market that they're trending up, but they can go down. It does happen, but it's still the same. Every loan program is different. Usually once your rate's locked though, it's locked for the most part. You can always refinance at a later time, and that's very important. Can you put up resources? Yeah, I can do that. And you can get a copy of this webinar also. Absolutely, I can put up the resource page again. How long do you need to wait after you purchase a vehicle to apply? That's a good question. So, you know, when you apply for credit, it does drop your credit score just a tad, right? Well, you can apply the minute you apply for a car. You can apply for a mortgage. There's no reason you can't go ahead and do the application. We have to see it to know what else is on your application. Just because you applied somewhere does not disqualify you from getting a mortgage. We just need to know that you have a car, that you were approved, what the payment amount is, and then we can go from there. We can work through most scenarios as long as we know what's going on. Let's see the next question. Yes, we will make sure everybody gets a copy of the webinar. There is an email that will go out to everybody that registered and signed in, and you'll be able to get a copy of it. What is an ideal debt to income ratio to help with getting approval? So, debt to income based on the loan program that you choose to go to. Anywhere from 43%, sometimes up to 56%. It depends on what you're purchasing, the type of home you have, or that you're purchasing, the type of home that you will have, and what program you go through basically. So to calculate your debt to income, it is a monthly calculation, not annually. And if you give us a call, we can, over the phone, we can just chat. We can go over what your monthly income is versus what your monthly debts are. You don't need to include stuff like grocery bill and gas bill, stuff like that. Let me know if that didn't answer your question. Will credit be pulled again after the 30-day approval if you haven't found a home? That's a great question. No, we can extend the approval for 60 days without pulling your credit. I have some people that it's taken them 6 months to find a house. Typically, when they email me or call me back and say, hey, I want to keep looking, their realtor is usually okay with that pre-approval letter until they actually find a house they're ready to make an offer on. And then they call me, we put in the app again really quick, we pull credit really quick again, and get them the pre-approval letter as fast as possible. That's genuinely how I do it. I don't want to pull your credit a lot if we don't have to. This is a partnership and we work together to get you there. So, and the resources, I'm being told that we're going to email you a copy of it so you'll actually have the resources in your email. Maybe I don't know how to go back and put it on there necessarily right this second. So, any other questions? Let's see, let me try this real quick. There, ha, I did it. Ha. Any other questions? Okay, well, that includes our webinar. You are welcome to send me an email, give me a phone call, ask any questions you have. We are here to help, and hopefully we're here to get you in a new home, a home of your dreams. Y'all have a great Florida afternoon. Bye, guys.